Contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our funds. It was an opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. And absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock. Nothing about our short position prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years earlier, because we believed and still believe that its business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. In January 2021, a group on Reddit began to make posts about Melvin's specific investments. They took information contained in our SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others, ordinary investors who were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts. When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at significant losses, both long and short, that were the subject of similar posts.